today it's the global cues that would perhaps peg us back. There's been quite a bit of sell-off actually overnight for global equity markets. That, of course, is the Nifty. Yesterday, we managed to scale up that 25,000 mark. But today, you are pointing downwards by about almost 500 points for the Dow, even though you've had some excellent numbers come in from the likes of Meta. But that really hasn't brought about that much needed fillip to the equity markets. S&P down by nearly 1.5%, and it's a savage 2.5% cut that we've seen on the Nasdaq. Now, traders are clearly bracing for the July payrolls report, and Amazon, that's been the slip, and which is why you see quite a bit of clobbering down, at least triggered in for the US equity markets. And guess what? Even Asia seems to be following that same sentiment. As I see right now on my screens, Japan is down a sizable 4.5%. It's 3% down for Korea, and Hong Kong as well scaling lower by nearly 2%. So seems like once again we're going to fall prey to the global markets.
Shaisha, we were in a similar kind of a situation, almost same time last week, and then global markets also stabilized, and Indian markets in a sense ignore what's happening in the global markets. Now, why have global markets fallen? I mean, suddenly from a 2.5% GDP growth, you cannot have talk of recession. So sometimes markets, they go through bout of routine profit booking. You have to bear in mind that it's been an extraordinary year, not only for Indian markets, it's been an extraordinary year for Nasdaq and for S&P also. So I would not read too much into the reasoning behind the fall, but would like to add that this looks like a routine profit booking. We were talking about Fed commentary same time yesterday, where there's a clear indication that growth is not getting compromised and inflation is coming down. So suddenly, I don't know from where the recession talk has started, because logically it really makes little sense to really start talking about recession, because anecdotally data is not pointing to that. But markets are down, and Indian markets will react to that. One large factor what has helped India of late has been the global flows and the global setup. So are we likely to go against it like we did last week? Or we are likely to react to it? Let's see. But I think I would dismiss all this talk that, oh my God, recession is around the corner. Two weeks ago, we were talking about the GDP growth of 2.5%. Fed is saying growth is back, inflation is down. So suddenly from where all the recession talk has started? So if you're trying to put a reason to the sell-off, and which I think is outright silly.
Yeah, but there are just these apprehensions right now that maybe the US Fed could be too late in cutting interest rates. And it's clearly gloomy sentiment that's prevailing across the rest of the globe that's percolated to the Asian markets as well this morning. So there you have it. Those are the deep cuts that we witnessed overnight. But it's quite a different tale to tell for our own markets. Actually, we did manage to wrap up the day above the 25,000 mark. 81,500 is where we closed in on the Sensex. Very different story when it came to the broader end of the market, because that was clearly very badly hit. A serious underperformance is what we've witnessed. But by and large, it was the Nifty Bank which closed with marginal gains. Media, realty, PSBs, those are some of the sectors that didn't quite perform. And, just taking a look at the kind of FII data as well, you did have a buy figure coming in from the FII community. And Nikunj, in yesterday's trade, at least we settled in above the 25K mark on close.
See, it's too early to say that all bets are off, but you will have a gap down start today.
Because of the global.
Exactly.
Markets, yeah.
Now, we were in a similar kind of a tizzy same time last week, which is what I said. And market started gap down, and then they really, picked up, and then we ignored the global cues. Are we in for more of that? I think yes, because again, what markets have told us that until and unless something seriously changes, this market right now is enjoying bout of liquidity. See what happened on the election day. See what happened on the budget day. All declines have been bought into it. Again, same time last week, I'm sounding repetitive with this one. Global markets had 2 bad days and Indian markets ignored that. So I will not be in a hurry to say because, Indian markets will reverse, directionally something will change. At best, I think it's a pause, little bit of retreat, which is profit booking in mid and small cap stocks. But the whole left out feeling is so strong that declines are just getting gobbled up. And I don't see a reason why that should change in the near term in any kind of a hurry. Look at GIFT Nifty. I mean, you got Nasdaq down 2%, Dow down 2%. Where is GIFT Nifty? Down not even...
Less than 100 points.
Yeah. And
just mildly
it's
soft.
8 o'clock. Market 7 khulega, right? By the time it will all be in the green.
Going to be back to tracking Tata Motors, which has been a beat. So has been Zomato. And then ITC, the non-cigarette business, of course, is not delivered on course with what the street was anticipating. And then there's Sun Pharma as well. Lower OPEX, but stable outlook.
So let's start in the order what we have on the screen, and let's start from Zomato. I track it, so I'm in a position to perhaps talk about it extensively, which is that, see, Zomato will be going down as the turnaround story, or one of the biggest turnaround story, I guess, of last 24 months. They continue to impress both in terms of growth and also in terms of the trajectory of where margins are moving and how they're scaling up the businesses. The food delivery business, which is GOV, you look at the Blinkit business, quick commerce business, sequentially also the growth really seems to be strong. And if one really goes through the commentary, well, they're saying that in this quarter, because of rain and other factors, maybe there could be an impact of base effect, but the business is not seeing any kind of a slowdown. So the trajectory for Zomato or the food delivery business and the growth parameters are intact. Then comes the stock. You have to bear in mind the stock is up 138 rupees or 150, I mean, it's almost 1.5 times in last 52 weeks, and the market cap is now sitting at 2 lakh crore. Which means you could ask yourself is that, okay, what is the next trigger now? What is the next thing you are likely to see when it comes to Zomato? And the next trigger is going to be either an acquisition which they've spoken about, or it will be a function of how the earnings would move. So that big re-rating, that moment of turnaround for Zomato, that is over. At this juncture, the stock is going to be a function of earnings, and on that aspect, if you look at Zomato, it's a hold. But if anybody is expecting that this kind of a run rate of Zomato surprise will continue, I think it may not happen. Then you spoke about ITC. Okay, paper business is cyclical, but cigarette business is okay, and valuations are strong. And this is one company where there is a very large interchange which is happening because of FMCG. It's a stock which could be an outperformer in this kind of a market, and it has suddenly outperforming as nothing's come for ITC again in the budget. So I won't say that they're firing full cylinders, but there's a trigger of demerger of hotel business. There is cigarette volume which is impressive. FMCG business has become sizable, and one can easily ignore the volatility in the paper business. But on top of that, I think valuations are attractive.
Okay, fair enough. And that's clearly the take coming in. Tracking what has happened with respect to Zomato. But you also have the Ola Electric IPO, and that is set to hit D Street today. All eyes on this one. And the IPO size is about 6,000 crores. It's a fresh issue of 5,500 crore rupees. They've raised about 2,700 crores from anchor investors, with the likes of Indus Stars as well as SVF Ostrich and Bhavish Agarwal offloading shares. And, given the fact that they've raised, Nikunj, a significant amount from the anchor investors, having a look at their overall financials, what's the outlook on the Ola Electric IPO? Should one subscribe?
See, if you're looking at subscription and then buying on day one or selling on listing, now that's a technical call you're taking. Now, that's a judgment call whether you want to play for the pop or whether you want to play for that, technical arbitrage. The point for me, what matters in Ola Electric is that, look, this is the mega trend, which is electric vehicles. B, do they have market leadership in two-wheelers? The answer to that is yes. And C, are there a lot of intangibles which are there in terms of, what they can do in terms of, moving the two-wheeler business into the battery business? Well, there is perhaps an opportunity. But the problem is that this business is a business where right now the profit is something which is still a distance away. For me, Ola is more than a two-wheeler company. For me, it is a company which essentially in manufacturing and in tech manufacturing, because two-wheeler and then motorcycles and then battery, all these are high growth businesses. Some of these businesses may be scaling up, may not be scaling up. So with Ola, you will have to take perhaps what could be called as a little bit of leap of faith, perhaps put that kind of capital where you can see some volatility. There is going to be a scarcity premium which this company will enjoy because it's a very popular brand. But ultimately, if you're betting on it, you're betting on the promoter and the business and the ability to deliver. And the odds of delivering are a function of how exactly they're able to understand technology. So it is not like an FMCG company or a business of defense or EMS company which is going public, where you know that okay, next 4-5 years you got short earnings. There's a lot of option value associated in a company like Ola because there is a battery business, the intensity is increasing. So that's all the negative part. So this is a stock where if you're looking at subscribing, you should have a long-term view rather than just playing this for the IPO pump. That's my limited point.